When it comes to financial markets, every one of us have different skills, experience, and motivations. This will determine how we prefer or should gain exposure to financial products. In this episode, we discuss the merits of both long-term and shorter-term trading. We will also talk about the financial concepts and economic factors that we should pay attention to when trading or investing our money. Providing the experience and insights in this topic, we have OANDA's Head of Asia Pacific and Emerging Markets, Philip Waters.
Hi there.
Hey. And Timothy Ho, our co-founder and managing editor of DollarsAndSense. Timothy, so you were in university when you first started investing, right? What got you interested in the topic initially?
So I actually got very interested in finance from a way younger age through I'm not sure if you guys know the teletext days, right? So in the past, what happened is that if you want to check stock prices on the exchange, you go to the teletext, and my parents were investing, so they sometimes asked me to help them check the stock prices on the teletext. That's where I got exposed to all these companies, as well as things like buy, sell, last done prices, as well as volume. When I was in uni, I studied econs and finance. That's where I also I was really interested in the financial markets, but that's where I actually learned the real things that move the markets, and was also at an age where I could legally start investing and trading. So that's where I opened a brokerage account and started buying my first few stocks.
Okay, so Philip, before we started filming, you told me that you used to test trading strategies or investing strategies for a module during your university days. What was the biggest takeaway, with regards to managing risk?
It was a capital markets module, and one of the things that they asked us to do was set up like a simulation account where you would then choose a number of stocks to invest into. So I found it really interesting. Biggest takeaway would be, and it surprised me, was the emotions that trading can evoke. Everything from the joy of seeing that profit change day to day to what quickly turned into fear and disappointment at times when you'd see that profit go away or even turn into a loss. So the importance there was like understanding how that can impact and influence your ability to stay disciplined.
Okay, so Tim, is there a difference between the types of assets that we should be investing in versus what we should be trading in?
Yeah, I think that's a great question, Dinesh. I think generally speaking, when I see a lot of people enter the markets for the first time, they don't necessarily appreciate the difference between investing and trading. So if you look at an asset class like equities or shares, you can actually invest in shares through a brokerage account. You can also trade shares via a CFD broker as well, and that's the same for things like indexes. But I think when it comes to certain asset classes like, let's say, property or real estate investment trust, REITs, it's mostly people invest in it for the passive income that it generates as opposed to trading these asset classes.
Okay, so both investing and trading involves gaining exposure to the financial markets, buying and selling assets. The objective, of course, is to gain a profit. Why do some people prefer investing, while others, pivot towards trading a little bit more?
The answer to that question ultimately depends on the motivations of the individual, but, one is typically shorter term in nature, which is trading. It's also a slightly different risk profile, and there's a different fee structure. So I think, if that's ultimately in line with the motivations of the individual, then trading might be more suitable to investing, which is, in contrast, more long term.
Yeah, I just want to add, one thing I noticed is that a lot of new investors or traders don't fully appreciate the difference between investing and trading. So what I tend to observe, and I guess to some extent I was guilty of it myself when I was younger, is that we simply enter the market because we think the price of a certain stock or a certain asset class will increase in value without actually asking ourselves if we're looking to enter into a long-term position, which is investing, or a short-term position.
So trading sounds a little bit more complicated from what you guys are already saying. We need to dedicate a little bit more time. We need a little bit more energy to monitor the markets. We need to be a bit more active, I would say, right? How does someone choose whether they should stick to investing and whether they can also become competent traders?
It ultimately comes down to the demands of both, right? So investing in some cases can be more sort of passive in its approach. Whereas with trading, generally speaking, it's a more demanding activity. You need to constantly monitor your positions, generally higher risk as well. So I think ultimately it comes down to that availability of time for the individual to learn those intricacies and then continually monitor their activities.
So Tim, there are a lot of content out there that we can consume to become better traders and investors even. There can be like research reports, explainer videos, interview videos, videos like what we're doing on YouTube. So what role do these content play if you want to become better traders?
I think for most of us who either invest or trade, content plays an important part in helping us get started. So whether it's a book that we start reading in university before we make our first investments, or listening to a talk, or even a video like this, if you're watching this right now, content is what gets you to understand the markets that you're looking to put your money into. But of course, content by itself is not going to be enough, right? So it's a bit like swimming, right? You can't learn swimming or cycling just by watching YouTube videos or reading books. You actually have to get your feet a little bit wet by trying out to swim. And it's the same thing with investing and trading, right? You actually have to put a bit of money into the markets. You probably would make some mistakes, make some losses. That's normal. But what you want to do is ensure that even as you make these mistakes, they're not catastrophic mistakes. You want to lose just a bit of money, and of course, most importantly, learn from your mistakes. So I think that to me is a better and a healthier approach towards learning how to trade, or even just learning how to invest.
And I guess I would add to that by saying I'd probably split it into a few things. You've got content and the role it plays in learning how to trade and how to apply certain techniques. Mm-hmm. And then you've got the content that's necessary to stay informed and up to date with the markets, because ultimately those market events are going to be what influences the sort of success or failure of your trading journey.
And I think OANDA is one place that we can go to get information on some of this content, especially related to market information.
Absolutely, yeah. We try. I mean, it's a real area of focus for us to produce as much content as possible to keep clients informed.
Okay. Another area that we can touch on as well, because there's a big difference in trading and investing, is costs, right? Yeah. That's why we need to understand, what cost that we're paying as traders versus investors, and we can also compare. So, Tim, what kind of costs should traders and investors look out for when they buy and sell assets?
Yeah, I think you're right. Cost is a huge part, because ultimately, the higher the cost, the more it eats into your return, right? So when you're investing in companies, in stocks, for example, the first thing to look out for is, of course, brokerage fee, commission charges, which you almost always have to pay to a broker to make the transactions. And I think one thing, especially when you're a small-time investor, like some of us retail investors, is that our capital size may not be significant, right? So we may not be investing a huge sum of money. So if your brokerage commission is a bit too high and it eats into your return, then it becomes a very inefficient way to invest. The other thing to take note is that, if you invest in asset classes like, ETFs that track a market index, typically there's also going to be a management fee that could be anything from 0.5 to 1% on average, and that also eats into your return. The last thing that I think we should also take note of is custodian costs. So quite often when we invest in, say, overseas stocks through a Singapore broker, we have to pay this custodian fee to our brokerage firm. And if your investment quantum is not high, what tends to happen is that you might be paying custodian fee every month or every quarter, and that actually eats into your return, especially if you're holding it over the long term.
Yeah, so I guess it's natural for you to answer, like, what kind of cost should we look out for when we trade?
Yeah, and it's a different answer because, and it also actually depends on the trader's style. So I'll just give you two examples. If you're someone who trades day to day, intraday, so it means you're entering and exiting positions throughout the day, you're probably most going to be concerned with the spread, which is the difference between the buy and the sell price. If, for example, you are someone who wants to hold positions overnight because of a sort of medium-term view, then you'll also be concerned with the spread, but you also need to pay attention to financing because there's an overnight charge that you'll be paying as well there. I think the important part is just looking for providers who are very transparent with their fees.
Okay, so what are three macroeconomic factors that we should be looking towards in 2024?
You've got, first of all, the interest rate situation in the US. So the optimism is very strong that the Fed will pivot to a dovish stance. Mm-hmm. And that likely would then have an impact on the bullish risk-on mentality towards the markets. I think the second then is the Bank of Japan and this feeling that they may move away from what has been a very long-term negative interest rate policy, and then the impact that has on both the currency, Japanese yen, as well as the markets. And then I think the third, again tied back to the US, would be the US elections and how the outcome of that may impact the China-US relations and then the subsequent sort of knock-on effect of that. They would be the three things in my opinion.
Okay. I mean, those are three major things that everyone should be looking out for, not just traders and investors, I would say.
But I think we must also be cautious about other things that may also happen, things that, we don't know what may happen in 2024, and all these things can also impact markets, whether you are an investor or trader. But I think particularly when you're a trader, because prices tend to be more volatile in the short term, even if in the long term they remain generally stable. So I think that's something it's worth noting as well.
All right. Okay, that's been a really insightful discussion. Very fun to hear both your takes on the financial markets, trading and investing. While it may sound familiar, trading and investing definitely sound quite different and suitable for different types of people as well. In general, you need a lot more time, knowledge, dedication, and expertise to be successful in trading. That's why we need a robust risk management strategy sometimes. Those who are interested, can learn more and read and watch content online, as well as attend trading seminars, courses to better understand the financial markets. DollarsAndSense has worked with OANDA for this series on markets. We'd like to thank OANDA, our sponsors for this episode. You can also read market updates on the OANDA website and other CFD brokers as well. And as Philip has shared, there are two sides to a coin. Regardless of any markets that we're in, there's always potential upsides and potential downsides as well. And as always, trade wisely. Thanks, guys.
Thank you.